Sunday, September 17th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at the waves of inflation of the 2020s. And some of you might have heard of the three waves of inflation of the 1970s. But if you haven't, here they are. And I think we're going through the same process in the 2020s. And this past week has been significant, in my opinion, in giving us signals about that. And we're going to look at that right now. And then we're going to look at what were the best performing investments or assets in the 1970s stagflationary environments. So the first indicator I want to look at is the bond market. U.S. Treasury yields, especially the 10-year benchmark, it closed at a 16-year high this past week, just above 433, as you can see. What that's showing me is that investors are not convinced that the Fed and other central banks are doing enough to contain price rises, or what's more commonly known as inflation. So that's the first signal there. The second one is the CPI data that we saw, and PPI. They were higher than expected. And as you can see, CPI on an annual basis is starting to pick up again for the second straight month. We went down to 3%. We're now at 3.7%. The other indicator is the price of oil. And many people think that oil causes inflation, but it's just a consequence of it. The inflation has been created by the central banks and the governments through money printing and borrowing since 2009 especially. And oil, of course, WTI closed for the first time above 90 in almost a year. We're at the highest level this year. And it looks very bullish. I've spoken about this falling wedge formation that you can see here. And the other indicator, of course, is a broader measure of commodity prices, is the CRB index. It has pretty much the same pattern there than crude oil. And we're nowhere near the 2008 high. So there's a lot of upside potential for commodities. And back to gold and silver. They did very well on Friday. They had a good close. They're doing well in other currencies, as you can see. In Japanese yen, we're at all-time highs. And I think it's only a matter of time that the dollar follows suit. And we know, if you've listened to me for the past few years, that all fiat currencies, not just the dollar, are going to continue to sink versus gold, silver, and other hard assets. And now I'm going to come to the part of which are the best assets to have in a stagflation. Well, it's commodities. And as you can see here, gold was the best performer in the 70s. So was silver and commodities in general. Stocks were flat in the late 60s to the early 80s. And bonds, of course, were called certificates of confiscation back in the 70s. So with that in mind, I've recently partnered with a company called West Red Lake Gold Mines. Their ticker symbol is WRLGF in the US and WRLG in Canada. Yes, it is a mining company, of course, holding physical gold or silver and commodities, in my opinion, will be profitable. But if you want to speculate on a riskier venture that could give you even bigger returns than the underlying commodity, I think West Red Lake Gold Mining is, a really interesting company. And why is that? Well, the biggest individual shareholder is a man by the name of Frank Justra. You've probably heard of Frank Justra. He did a debate with Michael Saylor, gold versus Bitcoin. It was a very popular debate. I think they got over 1 million views on Stansberry Research for that. And Frank Justra has been a serially successful mining tycoon, and he owns 12% of West Red Lake gold mines. And first we're going to start with the location of this mine. Well, it's in the northwest part of Ontario, in the Red Lake district. And this district, for the last 100 years, has been known to be a high-grade gold ore region. They had a gold rush back there in the from 1925 to the mid 30s. In the last 100 years, about 28 mining companies, they've dug out about 25 million troy ounces of gold out of the ground. So it's a prolific gold region in Canada, and the major asset for this company is a mine called the Madsen mine project. It was an existing producer from the 1930s to the 1970s. And the other interesting point about this region is that it's in a good jurisdiction. It's in Canada. It has good infrastructure as well. So now let's look at the asset. It's a very interesting asset, and that's why West Red Lake Gold Mining Limited is an interesting company. So the Madsen mine, as I said, it was a past producing mine back in the 30s up until the 1970s. And believe it or not, it's now a late stage development infrastructure. And why is that? Well, because the past owner, the previous owner, they developed the mine. They built a mill, and of course it has infrastructure like roads, so access to transportation. So, and at one point a few years ago, this company was valued at just over $1 billion. And as you can see, right now it's valued at 88 million. But what happened to the previous owner? It was called Pure Gold. Well, they took on too much debt, and they had to speed up the process of constructing the mine, and they cut a lot of corners. So they went belly up, and that's where West Red Lake Gold Mining Limited came in with Frank Justra, and they bought the property for pennies on the dollar. And this is exactly the kind of project that Frank Justra has been good at for the last 30 years. He was the co-founder, of course, of Goldcorp, which became a $50 billion company. So what they're trying to do now under the leadership of Frank Justra and a very good management as well, which we'll come to in a minute, is basically show to the market that the problem with the Madsen mine project is not the project or the mine itself, but it was the management of the previous owner, and they're trying to turn that around.
When a new mine fails, it's because there's an unfixable thing, right? The gold mineralization, the gold, you can't actually pull it out of the rocks because of the way that the chemistry is, something like that. But here there is no unsolvable problem. There was just money issues, there was some approach issues. Those things are solvable.
It's very rare an opportunity where you have all the infrastructure in place, a lot of underground development, a mill in place, water treatment plant, permits in place, a lot of the key elements of what you want to build a successful operation.
And yes, we have the potential of this becoming valued again at $1 billion. So it would give holders of this stock a 12.5 time profit, or a 1,250% profit, seeing where we're now. And the other thing I would point out too as well is that Frank Justra, along with the CEO Shane Williams, about a month ago, they added on to their holdings of this company. Frank Justra bought $2 million Canadian worth of shares. Shane Williams bought 100,000 Canadian dollars worth of share. Of course, Frank Justra is a billionaire, and that's why he bought more. So I said that the previous owner of this property had built the infrastructure. Well, they built a mill that's brand new. They've developed the mine. They did a lot of drilling. But the mill itself, the replacement value is $350 million. That's how much they spent on it. But right now, if you were to build another project and build another mill like that, it would take about five 5 to 6 years, and you'd have to pay $700 million. So we've got here a project, and let's say the previous owner, they were basically on the 90-yard line and they dropped the ball. Continue on the asset, the previous company as well, the previous owner, they issued a feasibility study. So that's a study which shows how many ounces of gold they wanted to produce a year. And they came up with 125,000 ounces a year. And comparable companies, for example, right now, that produce that amount, they're valued around $5 to $10 per troy ounce of resource, which would make this company be worth at least $600 million, maybe $1.2 billion. And that's the reason why the previous company was at one point valued at almost $1.2 billion. So now let's look at the business model, what they're trying to do there. Well, they're trying to bring in competent management, which we'll come to in a minute, turn the company around in the next 24 to 32 months and start producing at that mine. And their business model is very simple, as you can see here. They're trying to de-risk the resource. They're trying to do some more drilling and updating the market. They want to have a blueprint of how to build the mine, and also they want to put it back into production. And the mill, of course, gives them a lot of leverage. There's very few companies in this position that have a mill ready, and basically they haven't really paid much for it. This is what they've paid for the company here. So as I said, they bought it for pennies on the dollar. Their business model is sound. So now we're going to look at the management. Well, aside from having Frank Justra, who's like an expert in coming in and buying very interesting properties that have been badly managed and turning it around, we've got a good management here, very good management team. CEO Shane Williams, he's built 4 mines in the past 20 years. So basically every 5 years he builds a gold mine. He's also just finished building a mine for $1 billion producer. And so he's a serially successful mine builder. On the board, they've got a couple of directors that are very interesting. First one, Tony McCooch. He was CEO of Kirkland Lake Gold, arguably the most successful gold company of the 21st century. And the rumor is that Eric Sprott, of course, made $1 billion profit there. The stock went from $7 to $35 before the merger with Agnico Eagle. The other member of the board and another director is Duncan Middlemiss. Well, he was CEO of West Dome Gold, and when he was CEO, the company went from being valued at $1 to $15 under his leadership. And he also increased gold production to 1.4 million ounces a year. So to wrap up, we're going to look at the other owners, who's really interested in this project. And yes, aside from Frank Justra, who owns 12% of the company and is probably going to keep increasing his ownership, as we saw a month ago, he bought some more shares, a lot of shares. We've got Sprott Resource Lending Corp, probably arguably the most successful funding company in the mining space. They own just under a quarter of the company. And then you have Van Eck. They own 6.5%. And who's Van Eck? Well, they're the owner of the two most popular gold funds in the world, GDX and GDXJ. So as you can see, 40% of the ownership is composed of the cream of the crop of the gold mining world. And as I said, Frank Justra bought some more shares over a month ago, and he paid Canadian dollars 70 cents. And right now, as you can see, you can buy it for less. So that's why I think it's an interesting opportunity for those of you who are more interested in speculation. This is not for everyone, but I recommend you do your due diligence. I've put a link below in the description to the website of the company, And again, the ticker symbol is WRLGF in the US and WRLG in Canada. And with that, I'm going to wish you all a very good rest of the weekend. Take care. Bye.